Hello and welcome to Khaleej Times. My name is Rube. You're listening to our podcast series on financial planning. And this episode is particularly important because it's all about protecting your hard-earned money and your investment against fraud, against risk, against bad investments. And to talk a little bit more about how regulations sort of come into play and what kind of regulatory authorities are here in the UAE to ensure that your money is safeguarded. I've got two experts on the show. I've got Mr. Tobias Young. He's the head of product development and strategy at DGCX. Hello, Toby.
Hi there.
And I've got Miss Maggie Mansour. She's the compliance director at, DGCX. Thank you, Maggie, for being on the show. Okay, so before we start our discussion, a quick gentle reminder to our audiences who are listening and watching us is that this podcast series is powered by IG, where you can transact in over 16,000 financial products and financial markets. And with that, let's start with the basic. What is regulation and why do you think they exist or is important?
So regulation is a set of rules or directives that is made and maintained by the authorities. Usually this regulations is to maintain the integrity of the financial system, is also to protect investors and maintain orderly markets and promote financial stability.
Okay, all right. So basically, just to ensure that there is more confidence and there is more financial stability in the market. Okay, and Toby, would you like to take that up as well?
Yeah, no, absolutely. I think when you look at regulations, often people are reticent or scared of what they are, but they're there to provide a framework to protect individuals and to protect companies from not just on the investing side, but those that are investing for others as well. And it helps to understand what people's qualifications are in terms of the advice that they would be giving.
And you're saying it's not just companies which are regulated, but also individuals which are regulated.
Absolutely.
Yeah. Okay.
Absolutely.
Okay.
I'll give you a small example.
Yeah.
About 20 years ago when I was working in the UK, I had to take some examinations which were originally called registered representative exams, which fell under originally the SFA, which became the FSA, which is now the FCA in the UK, which is the Financial Conduct Authority. They're the regulator for everything on the finance side. Now, if you go to their website, you can actually look me up and you can see the qualifications that I had, what I was allowed to discuss in terms of investment, and what I was actually allowed to invest in for clients. Now, they have since lapsed, but moving on, obviously I now live in the UAE. I've worked on a number of different exchanges and so have qualifications with other regulators as well. So when I was in a former life, should I say, as an oil broker, we transacted in the US. And to do that, I had to be registered with the NFA, which is the National Futures Authority. Again, you can go to their website, you can put in my name, you can see my details, what I was allowed to talk about, what I was allowed to invest in, and what I was allowed to trade in. Subsequently, obviously, living in the UAE, I've dealt with the regulators in the Middle East as well. So I haven't taken exams because I haven't been part of that investing ecosystem, but I still had to work under their directive. So with that, we've got ESCA, the Securities and Commodities Authorities, DFSA and the FSRA, who are the financial regulators for the free zones in the DIFC and ADGM. But I'm sure Maggie will tell you more about those later.
What kind of regulatory body is there to protect a certain kind of investment? So which sector of investment is, say, regulated by a certain regulatory authority?
So Securities and Commodities Authority, mainly it's the regulated entities under it. It's the brokerage companies, the financial advisors, the investment management comps, the listed companies, financial markets like Abu Dhabi Financial Market, Dubai Financial Market, DGCX. The central bank regulate the banks and the money exchange companies, the insurance authority for the insurance companies. DFSA and FSRA has different types of activities, all regulated under their, because it's a financial free zone, so it's different than the onshore.
So when you say different, can you just tell us a little bit about it?
Yeah, so here you can set up your business either on onshore or in the financial free zones.
Okay.
So we have in UAE 2 financial free zones, the DIFC and ADGM in Abu Dhabi. So onshore regulators are Securities and Commodities Authority, Central Bank, and the Insurance Authority.
Okay.
The DFSA is the regulator for DIFC.
Okay.
And FSRA. And
I know why Maggie's smiling.
I know it's a bit difficult. But the most important thing is when you have a proposal from a company to invest your money in, okay, what is your regulator? It's not only, so the trade license is fine. It's you are maybe have a trade license from DED or from the MCC, but what is your financial regulator? So they need to differentiate between trade license and financial regulatory license. Okay. So brokerage company, for example, which is based in business pay, let's say, they would have a license from Dubai Economic Department.
Yes.
A trade license. Yes. It would be having activity to trade for brokerage for clients on behalf of clients. Yeah.
Okay.
They should also have an ESCA license.
Okay.
A license from ESCA to provide brokerage services on behalf of clients.
Okay.
So there are 2 types of license in this regard. We need to ask the investor. Need to ask the company about.
Okay.
So when you know this company is regulated by this authority, you can go online, check if the name of the company is listed there. If you don't want to go to check ESCA website, you can also go and check DGCX website. If they told you that we provide you with brokerage activities in DGCX, you can go to DGCX website, check who are the broker companies. You find the name of the company. If you are looking to invest in DGCX, you can go to DGCX website and see and choose from the companies listed there. So there are more than way to verify if the company can provide these brokerage activities, for example.
Okay, and since we're talking about DGCX and you are from DGCX, I just want to understand, so what is, and it is a regulatory exchange in the UAE, so what kind of services do you offer?
So as a regulated exchange, we're regulated by ESCA. We're recognised by the DFSA and the FSRA as well. We offer products in 4 asset classes to trade. So you've got currencies, equities, hydrocarbons and metals.
Okay.
Most of our products are distinct futures products. That means you can trade today for expiry at a time in the future. But the main products that are traded, you're looking at sort of Indian rupee trading, the world's biggest currencies, so the euro, sterling, Japanese yen, Swiss dollar, all against the US dollar, Chinese yuan as well. We've got a number of different gold contracts tracking the price of gold locally for delivery within the UAE, as well as international gold products too. On the equity side, we're looking at single stock futures, and then on hydrocarbons, which is really just energy contracts at present. We've got the 2 largest traded contracts in the world, or most heavily traded contracts in the world, I should say, in Brent and WTI. So those products are all available for people to trade. And as a regulated exchange, we can't list a product without the regulator's approval. So ESCA have to approve a product that we're to launch for people to be able to trade it. To add to that, when someone trades on exchange, their trades are guaranteed by what's called a clearinghouse. The clearinghouse sits in the middle of all trades. Therefore, if you were the buyer and Maggie was the seller, you wouldn't know who each other is. You'd never find out. In the middle would be the clearinghouse. They would take the money from you and they would take the money from Maggie and hold that securely as well. Again, as with the exchange, they are regulated as well by the same bodies and have particular licenses to carry out this kind of work.
Okay, wow. So it seems with so many regulatory authorities and bodies, and it's literally like a value chain where everything is controlled and everything is monitored and everything is regulated. But still fraud happens. Yeah, they do, right? So how do you think that, that could be prevented? And if it happens at all, what one can do about it? How can one go about registering a complaint? And what is the course of action that may follow later on?
Okay, so fraud can happen, but it's important to know when can we notice the red flags. So there is a red flags for fraud. For example, if someone tell you that your investment is guaranteed, your investment income is guaranteed, when you feel that something is that it's too good to be true. So you have a high risk investment, it should be.
So you should be looking for the keyword called guaranteed.
Guaranteed.
There are no guarantees in life.
So if it's guaranteed, it could be guaranteed, but it could be like very low risk, very low income you get from this.
Okay.
So this is mainly what is about how to find the red flags for the fraud. Okay. How you can raise a complaint for each of these financial regulatory authority I spoke about. They have on their website, and they have also contact. You can place a complaint online, or we can call them.
Okay.
You can call there. Also, it's important. So if you have a problem with a brokerage company or with a bank, which is a regulated entity in UAE, you have to first complain at the company, because maybe your complaint can be solved there. You don't really need to go directly to the regulator, unless there is something like you find it would be more appropriate to go to the regulator. It's risky. It's there is a huge loss of money. Or you can do both together on parallel. Okay. So you can go to the website. You can submit the documents, submit your complaints, proof of your complaint, and the regulator from then do their own investigation. They go to the company. They took all required documents. The company, like for example, account opening forms. They check the calls, the recorded calls for orders, if it's brokerage. If it's a bank account, they check also the account opening for the bank account. So they do their own investigation, and after that it is resolved.
Okay. But I mean, I don't know. Can you talk about it? Can you recollect a certain example where you think somebody who was probably a victim of a certain fraud, but was able to kind of recover the money or was safeguarded?
Yes, there is many examples. I would talk about brokerage companies mainly. For example, an investor could find on his account that there is a buy order. So someone bought shares, and he didn't give this order. He didn't want to buy these shares, and these shares dropped, and he lost money by this. So he didn't give order. He didn't want to do this investment. Okay. So why would the company do that in the first place? Because you have a broker. Maybe the broker think that this would be a good investment without consulting the individual. So in this case, the individual or the investor can go to the company and place a complaint. If the company didn't recover or provide him with a solution, or maybe sometimes some of the investors there's place orders when they forget. So they do their own investigation, and then if it's resolved, it is resolved. If it's not, he can go to the in this case ESCA and raise a complaint for them. So ESCA would go to the brokerage company. They will listen to the orders. They will see if there is a log of the phone calls, if there is written order. So they will do their own investigation. And after a certain amount of time, they do issue a decision side to you have to pay this money as a recovery for the investor.
Perfect. So
I was going to say, if I could just add to that, because I think having worked as a broker before, there is the possibility if someone was to find some shares or some equities which they haven't bought appear in their account. There is also the possibility that it is just a very simple mistake that can be corrected. So I would agree wholeheartedly with Maggie, but I think, as Maggie said, the first thing to do is speak to the company. It's not to immediately say, hang on, these aren't mine. Well, I'm going to go to the regulator. I think there's a definitive process to work through. You speak to the company. If it's a mistake, they should be able to resolve it very quickly. If there's something else that's happened, they should be able to explain that. And then if someone's still unhappy, then they'll be able to go to the regulator. But I think the key thing is to work your way through a process to make sure the first thing you don't do is panic and call the regulator.
Okay, that is very well explained by both Maggie, you and Toby. Okay, so my next question would be that what if somebody ends up investing in an unregulated, say, product? In that case, do you think a regulatory authority will be able to help an individual out of innocence? Let's say someone is not aware and ends up investing into an unregulated product. Then what should one do?
So if this happened, I think the individual should go to the police, because then if the company is not regulated by the regulator, they cannot go do investigation, they cannot ask questions. So police can do that. So if he found that this company is not regulated, and I don't have a financial regulator which I can complain to, then they should go to the police.
Okay, all right, okay. And how about if somebody has invested abroad, and do you think that the regulator in the UAE, they have a certain control, or the jurisdiction here has got control over international markets, and they can sort of safeguard or protect the investors' money there?
So it depends. If you are investing your money with a local brokerage company, so local brokerage companies can invest abroad for you. So the local brokerage company is responsible for the investment. So even if you are investing abroad, but if your investment is with the brokerage company in a foreign country, in different country, then would be the regulator of that company. So if you open an account with a brokerage company or with a bank in UK, then FCA would be the regulator. So that, but also it is worth mentioning that the regulator here, they have a memorandum of understanding with other regulators for cooperation, for investigation. So they're all the time that they find a way to cooperate and to resolve problems related to investment.
Okay, Maggie, since we're talking about regional regulators here, I want to understand what are the kind of initiatives which are launched by the regional regulators to create a secure trading environment for say investors here, for traders here.
So I think the most important thing is the regulation itself and the bylaws of the financial markets, for example. So these regulations are when they are good, this is how you protect your investors. So for example, ESCA recent in 2017, I think they issued a regulation about the fit and proper requirement for individuals who work in financial services. So this fit and proper requirement say that you cannot be a trader until you have passed certain exams, similar what Toby talked about in the UK. You have to have certain qualifications, certain experience. After that, you can be qualified to be a trader. So this is how the initiatives come. Also, they do some awareness sessions. They have these conferences and workshop all the times, which is open to public. Also, they do a lot of campaigns also on social media, which you can follow and you can read and learn from it.
All right.
I think we can probably add to that the regulators often work together in getting their message out there, in trying to protect the investor and trying to make sure that everybody that is working within the field is regulated. So we'll often see initiatives like ESCA Investor Week, where regulated companies, regulated exchanges, as well as other regulatory bodies will get together to provide seminars, information, and basically try and educate everyone, because it's all about education. If someone doesn't know about regulation, they don't know if they're inside it or outside of it. So the main thing is obviously to try and make sure that everyone is aware, try and bring everybody in, try and protect people from those that want to defraud them, essentially.
And one can sort of gain knowledge on various regulatory authorities one could be attending these kind of seminars like ESCA, sort of they do these workshops and seminars to bring, like you said, Toby, to just kind of educate everyone so that everyone is aware. But besides that, on my own, if I want to sort of know a little bit more about various regulatory authorities, the kind of regulations that are being put into place when it comes to financial investments and transactions and so on and so forth, trading, should I go online and start my research from there?
Yeah, so if you are looking to have, for example, you're looking to open an account with a company which is regulated by ESCA, you can go to ESCA website. They have a lot of educational material about the sectors. Similar for central bank and insurance authority. Also, you can some companies itself, they have this education material, so you can learn more about this investment, and most importantly is to read about the risk of this investment and to ask questions. What if? So this is basically what is important for investors to understand the risk involved in their investment.
Yes, we have since we've already spoken about the fact that but I want you to elaborate a little bit more on this, that how do regulatory authorities here, so for example, DGCX, how do they manage risk for an investor or mitigate risk for an investor?
Regulator, so regulators, basically the regulations, and they do also have inspections. So all the regulated entities are subject to inspection from regulators. So they have reporting obligations. There is for example, every month, each company have to submit reports related. I'll give you an example again from brokerage point of view. So there is reports about segregation of clients' accounts. So how the company is segregating between the company's fund and the client's funds. This report is submitted, for example, from every brokerage company every month to ESCA. Also, another report about capital adequacy. Capital adequacy means how the company is able to pay its liabilities. This report is sent every month.
I got it.
To ESCA. So they have certain controls in place, reporting obligations, inspections, the rules itself. So there are several things included.
I think to add to that, obviously having been a broker, all of our phone calls are recorded that come in on the dealing desk. When we take an order, we write the order down, and it might sound strange that we write the order down, but it's written down, it's time stamped, we then process the order. But then those records were held for 7 years as a minimum, right? So if someone came back a year later and said, I want to hear the tape on this conversation, so the only person that's likely to do that is a regulator. I want to see everything to do with this trade. So you'd go to the archives, you'd pick the tape out, you'd get the ticket out, you'd have the timestamps on the ticket that will record all of your actions. So your phone call, timestamp 1, your order would go in, timestamp 2, the order would get filled, timestamp 3, you'd phone the client back, timestamp 4. So you'd be able to log all of that. And that would be part of the audit trail that they would look to show that you're complying with the regulations and acting in not just the client's best interest, but also acting fairly within the rest of the market as well.
Okay, so Toby, as you mentioned, that research, doing your homework is crucial when it comes to, investing or trading, and especially more if you are a new investor. I want to know how important is research or doing the homework. I mean, of course, we can go online and we can read everything about it, or is there a strategy? I mean, what to absorb, what to leave, how to know what is right, how to know what is not right?
Yeah, look, I mean, I will always say, and I'm pretty sure Maggie will agree with me, as an investor, always do your own research. Do research, do some homework, speak to people. The key thing is that the information is there for you. So, for example, if you wanted to go and trade with company ABC, you'll be able to look up company ABC. You'll be able to see who they're licensed by, who they're regulated by. You could then go to those regulatory bodies' websites. Then you can check that, as we've said. At the same time, you also need to do your research in what you want to invest in. Do you want to invest in equities? Do you want to invest in futures? Do you want to invest in options? Exchange traded notes, exchange traded funds. So you need to kind of look through all of those aspects to decide what you want to do, and you can only do that with research. Again, you mentioned the internet, but you can talk to family, friends, people with experience, but ultimately the people that you will be talking to, or you should be talking to, are those that are regulated. And in this day and age, I think the internet in the last, 25 years has really changed the basis for doing your research. But there is times, and it's not as common now, but I'll give you an example of a listed company in Canada. It was a company called Briex. So they were a gold mining firm, and they claimed to have discovered huge reserves of gold. So their share price rocketed. Lots of people got involved, and the more it was going up, the more people were buying it. And people saw it as, I'm going to get really rich here. I should buy more. And then one day, the auditors came and they started looking at it. And when they did their research for the gold mine to show how much gold was there, the only sort of the top layer of soil is looked at, right? So you may be looking at the first foot, maybe 18 inches. Okay, so they've done that and it looks good. Share price has gone up. Then they've gone back and looked at it again, and this time they've gone deeper into the ground. And the deeper they've gone, the less gold they found. In fact, they ended up finding no gold below that. So it's like something doesn't add up. Gold comes from the Earth's crust, comes from thousands of years of being within there. It's not necessarily just going to be lying on the top of the ground. So time went on, the share price started to come down. And after an investigation that went on for a little while, eventually the company went bankrupt, and the owners were, or the original investors, the original owners were arrested. And they found out that what had transpired is they had taken the land and they'd taken shotgun pellets. And they'd taken the pellets out of the shotgun and they'd put gold flakes in that and then fired them into the ground. So when they did the testing, the gold had permeated through the 18 inches they needed to build their business case to show that they had a viable gold mine. But when it came to it, there was actually no gold there, other than the pellets that they'd shot into the ground. Consequently, obviously, the company went bust. But the funny analogy now is that the share price, which obviously went to zero, the certificates issued to the holders of the shares are now worth more than the company.
Oh, wow. Okay. But that also sort of brings me to the question that, so despite all the research that one can do, what do you do in cases like these? I mean, then you are kind of, if you put your money, and then you end up losing everything, right?
So I think there's a couple of things to look at there. Yeah. The example I gave, the proponents of the fraud were dealt with by the authorities. Yeah. At the same time, I think there's a lesson there, and maybe it's an English saying, don't put all of your eggs into one basket. So it would be about diversity and diversifying the portfolio that you're invested in. No one goes and says, right, I'm going to invest all my money in this one product, because they're putting themselves at risk. We talk about mitigating risk, using regulated companies, looking at regulatory bodies. You're trying to mitigate your risk. So at the same time, you're probably not going to put all of your assets into one thing. You might buy some property, you might buy some equities, you might buy some precious metals, you might buy some gemstones, all sorts of different things. But if the property market collapsed, you still have other investments that can do well for you. If the price of gold collapsed, again, you have other investments that can do well for you. Now, that's not necessarily advice on what to do and how to do it, but I think it's well known in financial circles that you need to diversify your risk, and you need to mitigate it in some respects. And that's kind of what we've been talking about today in terms of mitigating what happens and how you invest, in terms of making sure that your funds are protected from bad actors, and that the risks within the market are the only risks that one is taking.
Okay, Toby, I'm going to just ask you one question before we wrap up the show. Since we're talking about the Canadian company, I want to know that, so do you think that in this case, the company was regulated? And if it was regulated, then, there were investors who were then, again, caught up in a fraud, right? So should I say that despite the fact, that despite being regulated, a business being regulated, you may still have a chance of losing money? Investors still may run the risk of losing money.
Sure. I think it comes back to Maggie's point earlier, that if something looks too good to be true, it generally is. And if you look at what happened with this company, their announcement of gold finding and gold reserves and what they were going to mine was so unusual, that in those times that people had no way of fact checking it. So consequently, the share price just kept going higher and higher and higher. But because the stock was listed on a stock market, there's regulatory bodies in place that protect the investors, that ultimately meant that people that perpetrated the fraud were arrested and went to prison. So yes, it can happen, and in theory, it can happen with any company, but it comes back to something. If I offer you a 1% return per year on something, you say, that's probably about right. If I offered you 100% guaranteed return, you'd say, how's that possible?
But in cases like these, do you think that the investors, more or less, are they able to kind of recuperate some money, or
the assets of the company would have been liquidated, and there would have been cents in the dollar? But I'm giving you an example from over 30 years ago. So since then, companies of that size, the kind of growth, the kind of sort of buying mania, the rally in the share price, it doesn't happen like that anymore. There's more measured responses, and there's also better ways to geologically look at the land, look at the ground, see how deep something would go. So if someone tried that today, I would imagine they would get caught out pretty quickly.
Okay, perfect. Thank you guys so much for watching and listening to our podcast today. And all you have to do is log on to khaleejtimes.com, where we have lined up 10 episodes on financial planning. So anything that you're interested in, you can go there, you can browse, navigate, and listen up. And, start your first step towards becoming a smart investor. Also, just to remind you that our podcast series is powered by IG. It's a platform where you can transact in over 16,000 financial markets and products. And just to remind you that our podcast series is powered by IG. It's a platform where you can transact in over 16,000 financial markets and products. So keep tuning into khaleejtimes.com, and also you can log into our social media pages, YouTube, Twitter, Instagram, Facebook, and listen to our podcast series on financial planning, various episodes there as well. That's a wrap from us. Thank you so much, Maggie and Toby, for being on the show.
Thank you very much. Thank you.